Good evening and welcome to the FiTT Show. Financial information for today and tomorrow. Bobby Purnell Kinzer.
Purnell. And I'm Thomas Doty.
And we are the FiTT Show, helping our folks get their finances in shape. Welcome around the US of A and around the world as we reaching out to all folks near and far. This is a great day. We're glad you joined us. We're here every Thursday at 8 p.m. And this is Eastern Daylight Time, right? Not standard. Boy, I get it mixed up.
I can't keep up with that,
I
Bobby.
know. And we're glad you joined us. And like you said, we're here same time, 8 p.m. East Coast time in the United States of America. And just want you to know, give a disclaimer that we are not financial advisors. We do not have any fiduciary responsibilities, but we do provide financial information, education, and financial literacy, hoping that it can help you increase your bottom line and not just your bottom line, but leading into generational wealth also. So make sure you tap in and please go out there and share on Facebook live and on YouTube. You can subscribe, tell people to subscribe, and also click on the like button and the heart button because that gives us traction to the people out there. That's how the algorithms work on Facebook. And please, we try to make this show interactive. We're in a virtual studio, but you can interact with us by putting comments in the comment box. And by the way, the more comments you put in the comment box, that exponentially exposes us to more people. But, if you have an opinion on anything we're saying or have a question about anything we're saying or a topic you like for us to cover at another time, and if it's something that we can answer within today's show, we'll do it. But if it's something that is outside of, it takes more time to explain, we can get back to you and let you know more about whatever that is you have a statement on. So, Doug, how are you doing today?
Happy. Doing okay, my brother.
Yeah. I'm glad to see you doing okay. How's the weather down there?
It's been nice.
Yeah. Okay.
It's been nice 70s.
Yeah, that's that time of the year that I love when the trees are red and orange in the fall. But then that daggone winter is right around the corner, boy. I'm telling you. But
You
I'm
can have
glad
that
you joined us. And
on south.
I know. So, Dope, we want to start off with the top of the show, which is the stock market updates.
Ooh,
And
ugly.
I,
Ugly.
I don't think it was a good day today.
It ain't been a good week. It's been a tough week. And I don't know if you guys remember, but I talked about this last week, how uncomfortable I was with the market. And it started to show some cracks, a couple things. I think the market has had more layoffs this year than any year, I think, since 2009. And things just aren't good. The market had been on a good little run, and we had talked about some of these valuations being too high. But it's been an ugly week. But as we always tell you, we always take the long view. These things happen, and the market usually comes back strong. Not sure how long it's going to take for things to straighten out because there's a bunch of things wrong right now. But the S&P for the week is down 1.5%, still up 15% year to date, so not to worry. NASDAQ did a little worse. The AI stocks, which were all on just a crazy roll, NASDAQ ended up dropping 2.2%. And you look at the big boys, Microsoft dropped 29. Apple hung tough. Apple is just kind of doing okay, but it's because they think it's the iPhone 17 and some of their cloud work. They're doing all right. NVIDIA dropped 15. Google's also hanging in. Google and Apple are doing okay. Pfizer's up a point. Palantir dropped 20, and United Health dropped 23. And United Health is an interesting story. Remember I got into this stock at 301. It got as high as like 360. and it's been on a free fall since then. And the reason being, they think they still have some problems there, and that it may take a while to work those out. And I think I told Bob last week I was thinking about getting out, but I think I'm going to hang in there and see how it all shakes out. And finally, my most recent purchase of Corning, symbol GOW, it dropped a couple of points. Again, it's an AI stock also. And so all in all, it was a pretty rough week. And with there's a lot of stuff going on with the tariffs, interest rates, a lot of layoffs. I mean, every day you read about another firm laying off. Everybody's expecting weakness in the market. So we'll have to see how things shake out. But tough week this week.
Yeah, it looks pretty rough, though. And gold, because the market was doing well, gold was going down. It dropped back under $4,000 an ounce, but it's back up. Obviously, when the market goes down, it seems like commodities go up, and gold is back up. It's I think at $33,994. It's still under 4,000. But I was noticing though Procter and Gamble stock was up a little bit. I don't know that's one of those staples, yeah, because that's soap powder and toilet paper and all that kind of stuff. But they had been declining, and I don't know if they get hit, with those products overseas, if all of them are made here or not. But I just noticed that was up today, but all of the stocks were down. But like I said, gold was up and silver is still plodding right along. But Nvidia took a hit. Tesla took a hit today too. Took a major hit though. I'm talking about maybe $16 a share. I don't know what's going on there.
They agreed to pay Elon Musk I can't even say it, $1 trillion. That's what his compensation is going.
Compensation package. God.
$1 trillion.
Wow.
One more time, $1 trillion.
That's truly amazing.
That's ridiculous.
So let's look at the cryptocurrency market. DOT, the cryptocurrency market, took a major hit. Matter of fact, I need to make this correction here because that's actually what's that difference? I mean, it's down 365 billion as a whole, right? But the Bitcoin is down $9,369 from last week, and the week before that, the week over week change was 3,000. Remember, it got up to over like 121,000, and it's down to 101. Like we say, it's really highly speculative, and you can see that. Wow. And then look at Ethereum. It took a 15% hit, though.
Yeah, this ain't where you want to put Junior's college fund. That's for sure.
No, that's for sure. And Ripple, or Tether, which is tied to the dollar, it went down for the first time by 1 cent. And first, Binance was in fourth place, but now XRP has taken it over. And XRP was one of the places they were thinking about starting to regulate that particular cryptocurrency. But I don't know. But yeah, the market, look at Solana. Solana's down 20%. And Binance is down 17%. And though I think, is this the Binance that Trump, the guy that Trump pardoned, that was on over Binance, man?
I believe it is, but
yeah, that's the same Binance, but they took a hit for 17%. So, as we always say, it's very good to diversify, but also understand your risk tolerance and what your goals are, because that really determines what you should be in. But cryptocurrency, like we said, is just highly risky. Don't put no money in there unless you can afford to lose it. That always sounds crazy when I say that, though.
I know, because it ain't really true. it's kind of an extreme because I don't recall anything ever going to zero.
Right. Yeah, but
I hear what you're saying. The point is, if you can't afford some volatility, you don't want to mess with that.
yeah, and like you said, don't be putting little Leroy's college fund in it. That's what
Yes.
that means. So last week, though, we talked about is your nest egg enough? Meaning, just having a number wasn't enough. Having income flow and making sure that you have enough, then saving one lump sum in a traditional savings account or even just in your 401k plan. You need to also look and make sure that you always say that you're maximizing the return of your investments because of inflation and because of taxes and so many other crazy things going on these days. Nope. But today we're going to talk about an interesting topic. What about mid caps? What about mid caps, though? So let's get into this because I know a lot of people are like, wait a minute, I've heard about market capitalizations and large, small, mid. Let's get into what about mid caps, though?
Yeah, mid caps. It's especially appropriate now when the thinking is that a lot of the AI Magnificent Seven are all, overvalued, and the steam may be out of those sales. But what midcap does, it offers an ideal combination of stability and growth. And so all you read about though is Nvidia's, Apple's, Tesla's, all the big
Yeah,
boys.
Microsoft.
But and you can see they have these crazy single day moves, and small cap companies also draw some spotlight just because they have big moves too, because they are small and have crazy room for growth. But today we're going to give the market's middle child its due. Okay, and what are mid cap stocks? Broadly speaking, it's just like it says. They're bigger than small caps and smaller than large caps. It's kind of in the middle. The market cap can range depending on who you're talking to, but you're going to see anything from 5 billion to 20 billion or 10 to 20. Some people say it's 11 to 65, but it's kind of in the middle.
Yeah. So now, if you research the stocks or stock funds, you probably often see companies categorized as market capitalization. But what is this and why does it matter? For starters, market caps can give you a general idea of where a company stands in the business development of the process. Now, if it is a relatively new public company, for example, if so, it might have room for growth like small caps, but they're risky because they're new, right? Market cap can also provide a rough gauge of a company's stability, like Dote said. Large cap companies tend to be less vulnerable to the ups and downs of the market than mid cap companies. And mid caps are generally less susceptible to volatility than small caps. And just to give you a little example so you can understand what does market capitalization mean, this is how you calculate a simple example formula how you calculate market cap. You take the total number of shares outstanding, like common shares, and have you heard of that? You take the total outstanding shares and multiply that by the stock price. For instance, if they got 5,000 shares outstanding out there and the stock price is $20, then that market capitalization is $100 million. Now, the levels are large cap is over 10 billion, mid cap is 2 billion to 10 billion, and small cap is companies 300 million to 2 billion. Now, despite the risk, mid caps can be called the sweet spot for investors due to the potential for strong growth and attractive risk reward profile. Now, some analysts, even suggest mid caps has outperformed um, larger stocks over time, but we'll see. We're going to talk about today, and so mid caps are what they call they're in the middle, of the market cap world, which is why they also refer them as Goldilocks stocks or funds. Why Goldilocks? Well, we assume everyone is familiar with the story of Goldilocks and the Three Bears. The moral of the story is that you'll usually find happiness in between the two extremes. Now, let's get into it, though.
Yeah. First question: why do people buy mid cap stocks? And the reason is they tend to exhibit an ideal mix of both large cap stocks and small cap stocks. They're more stable, better capitalized, more profitable, and have wider revenue streams than small caps, but they still have more room for growth. Large caps usually have a little less room for growth, and they're oftentimes nimbler and often aren't as overcrowded as some of the big old blue chip stocks. So it just doesn't sound good in theory. The long-term data studied by a variety of asset managers over the years show that mid-cap companies are the real deal. They have an 11% annualized return, and mid-cap stocks have outperformed small caps. Their return's only 9.05, and large caps, whose return is 10.4, since the inception of the Russell Mid-Cap Index in 1991. That's 1991 through the end of 2024. And they've done this often. Mid caps outperform large cap 50%, 56% of the time, and they outperform small caps 92% of the time for any monthly 5-year rolling period that you choose.
So, got a little question that I'd like to address. Clutch said, is there a bubble on the horizon?
Shoot, if I knew that, I'd be owning me an island in Tahiti, kicking back, drinking mint juleps.
Yeah.
But it could be, Clutch, and I kind of mentioned this last week. I think there's a lot of negative things going on right now, even though earnings had kind of carried us, through the last couple of weeks. Everybody reported very, very good earnings, but you look at all the layoffs, you look at the possible inflation from the tariffs. It could be, but I'll leave that answer to some PhD economist.
But it sure looks like it's looming. Let me put it like that. Can't predict if it is, but it seemed like the big shoe was about to drop. But who really knows, right? And recent history hasn't been nearly so favorable about mid caps because actually large caps have been doing well. Like mid caps stocks present a moderate risk profile. That's the beauty of them, right? And the reason why we talked about these because we always talk about diversifying your portfolio, and this is another way to diversify. Now, mid caps are sitting between the higher risk of small cap stocks and the lower risk of large cap stocks. They're characterized by high volatility and less financial resilience than large corporations, but offer more stability than smaller companies. So small caps that have, been less established. That's why they call small cap, because these up and coming companies and they're not that well established, so there's a little bit more risk. But check this out, though. The last 10 to 15 years, several factors include growing economy, because it's been a bull market those last 10, 15 years. Seem like actually have been, and the economic advantages for large companies. Periods of rocky markets driving investors' preference toward the more stable holdings, like the large companies that you talked about. And investors, started, plucking off the large sums into large cap funds, but the result in how the market has been so favorable to large cap companies, which I told you are 10 billion or more. The middle and small size counterparts. In the last 10 years, the S&P has generated a total return of 293%. And S&P top 500, those are large caps. And through October the 30th, that is in the last 10 years, and then the Standard and Poor's 400, if you take it, which is another indicator, 144% gain. So in the large caps, but all of a sudden things are starting to get tight and they're starting to turn, as you can see, we talked about the market though, and the lack of performance has translated into historically low relative valuations for the mid cap space. But earlier this year, numerous asset managers are starting to see that there's a case for allocating in your funds into the mid cap stocks, because mid cap stocks haven't been this cheap. They're really cheap now, and the relative basis since coming out of the bubble in the 2000s, which we know that was another economic downturn. So they're really discounted now, and it's a good way to get in, and it's more affordable.
Yeah, and let's say you want to find a mid cap stock. What's the best way to do it if you wanted to buy one? And the first place you ought to look is mutual funds, ETFs. That way you don't have to be as exact when it comes to picking. You aren't picking individual companies. You're picking a group of stocks that are usually run by a fund manager who hopefully has the expertise to pick the right ones. And there's a whole bunch of those. And you got to be a little careful though, because mid caps can act different than large caps just when large caps are in their growth cycle. So you don't always get the same characteristics out of a sector, large caps, that you would get out of mid cap. So make sure you kind of understand that. And mid cap consumer staple stocks can be pretty active. And so in other typically defensive plays, such as utilities, can have a little more action in mid cap stocks than some of the large cap counterparts. And so some investors might look to mid cap stocks to provide an income also. And that's why you look at a utility stock or something like that.
Yeah. So, so you need to look at firms. You said something though about the sectors. And one of the things is look at firms within the sector, like the Standard & Poor 500 is made up of S&P, the S&P 1500 is made up of the Standard & Poor's 500 large caps. And then there's the S&P mid cap and S&P small cap. However, while normally, caps get a universe of stocks of all caps, we're solely using a starting point is to get into different sectors, like Vanguard got a mid cap, iShares Russell mid cap, Spider, S&P. There's a lot of companies that have mid caps, you all, and they got mid caps into ETFs, exchange traded funds, so you can get out and get in very easily. That's just some of the type of market caps to consider is the different sectors.
Yeah, and if you wanted to pick and say you want to do the research and pick one, you try to look for a market capitalization somewhere between $2 and $20 billion. You don't want to. I don't want to get you too far into the detail, but all three indexes, NASDAQ and Dow, they all could contain companies that are mid cap based on these market capitalizations. So if that's kind of where you want to be. You want to be somewhere with a market cap between 2 billion and 10 billion. Okay.
And then another thing to look at over the long term, looking for at least an expected growth earnings by about 7%. And when you're looking at this is a reasonable level of long-term growth earnings. Because remember, anything that you are earning above a savings account, well, that's traditional, but at least a high yield savings account, if you can get something higher than that, then you're doing good. So at least look at something that gives you long-term growth of 7% in the mid cap, excuse me.
And other thing you want to look for is making sure they're growing revenue by at least 10% annually in the next couple of years. And so that gets you looking at companies that aren't just going to achieve higher earnings with cost savings. The company I worked for was very efficient at cutting costs in order to grow revenue. You want to look at you want to look at sales going up, not through acquisitions, but through just growth of real sales. So that's what you're expecting to find.
Another thing to look at is at least eight, um, you know, mid caps that are being covered by analysts. Look at stocks that are on Wall Street analyst radar, which makes it likely that there's more reporting and more insights on those companies when you see those. The more research you have that we always talk about at your disposal, the more educated decision you can make. You don't have to be no finance guru if you just look at some of the basic indicators like, is the company growing? Is the company steady? Or do the company have major lawsuits that can really drain on their cash? Things like that when you look at the reports.
And finally, you want to make sure the analysts who follow that particular stock, that there's a consensus buy rating. And typically, you want the rating to be 2.5 or less within S&P Global Market Intelligence ratings, meaning there are some of the analysts that they're their favorite stocks, and so you want to make sure it's considered a buy, and that the analysts who follow that are consistently backing that particular stock. Those are the things you look through in going to find out if this is a stock that you want to buy.
Yeah, and another thing, when you talk about investing, always look at the balance between the risk and reward, right? Because the higher the risk, the higher the reward. The lower the risk, the lower the reward. But you're always looking for a balance. Despite its risk, mid cap stocks are often seen as what they call the sweet spot for investors because they combine the stability of an established business model with significant growth potential. And they have already navigated the high risk startup phase, but still have substantial room to grow into a large cap status. This blend makes them valuable component of a diversified portfolio for investors with a moderate to high risk tolerance and a long-term investment horizon anywhere between 5 and 7 years.
And kind of to wrap this up, if you look at a mid cap segment, it's underfollowed by the investing public. Most of the things, all of the stocks we talk about, I'd say 99% of them, you've heard of the company or they're a big company that you've probably read an article about or seen in the paper or something. And that's because in most cases, investors are usually interested in well-known large cap stocks, especially people who are just starting. And nobody's really into the up and coming small caps just because it's hard to find out about those. And the results of those small caps is so unpredictable that they could be losing money, and all of a sudden get a big contract and do well. So a lot of people don't get in small caps. People kind of hang out in large caps. But mid caps can provide investors with an opportunity for growth. It's kind of the sweet spot right in the middle. And especially given this market we have today with a lot of uncertainty, might be a good time to look into mid cap stocks.
So I had a question about bank liquidity. Is there future looming for the banks? And since I can tell you that I've worked at the FDIC and I still get their reports, the interesting thing about banks are doing very well right now. And as far as trouble goes, I think we might be up to, last time I checked with my man, I think they might have closed at the most 4 to 5 banks this year. And that's very low because back in the economic downturn, they closed over 25 banks. And there were some big ones too. But the banking is looking pretty stable, believe it or not. So as long as you keep your money in a bank that has those 4 letters in the window, FDIC, you are definitely pretty much safe.
Hey, Bob, And I mentioned last week, if I were you guys, I'd make sure you have some cash on hand just because we are definitely in unprecedented eras right now with you got basically the army patrolling cities, and you got AI hackers trying to tear down hack a lot of the big companies. So I would make sure I have some cash. And the other recommendation, I always got to talk about scams because I'm so worried about anybody getting caught up in those. But something else you ought to do is make sure your family has a safe word, because we've talked about with AI, especially as many of the kids that are on social media, with AI, they can copy your kid's voice and call you up and ask you, tell you they're in jail, tell you they need a lawyer, tell you they need money to pay something. And it can sound exactly like your son, grandson, daughter, granddaughter, cousin, uncle, whatever. So always make sure and don't share it with everybody. It ain't safe if you share it with everybody. Just share it with the people that you would bail out if they called you and needed money. And make it something simple that everybody can remember. But every family should have a safe word that if somebody calls you, said, "Hey, I'm in this little hick town and I gotta have $1,000 to not go to jail." And before you send it, make sure they tell you that safe word so you can know that it's definitely legit and not AI generated.
Rodney Madison, who just retired from the FDIC, he said the FDIC has closed 2 banks in 2025. So that just lets you know a little bit about where we are. Because I told you in 2008, the economic downturn, if I'm correct, we closed over approximately 25 banks. And dope, when I was at the Federal Savings and Loan Insurance Corporation, we closed over 747 banks. So if we can weather those things, as long as we got the FDIC and the Federal Reserve, we're going to be pretty good. It might be some turbulent times coming up, you all, but like we always say, if you are cautious, and we talked about the show the other week, intentional spending, live within your means. You may have a future shock, but you too will be able to get through this. But the name of the game is really, really managing and making good decisions with your money, because there's so many things out there, the shiny objects, and I mean, young people today, though, they got so many nice things that they can go for, and it's so important that we stay focused and don't get caught up into the rat race of buying those things. So with that, I'd like to go dope, and let's go to the summary and takeaways. Pretty short and sweet this week.
You haven't had any technical trouble in a while, Bob. You've been doing pretty good.
I know. That's a good sign. Don't talk too quick. Okay, here we go. All right. And you take it away, dope.
Yeah. Mid caps can provide a good diversification tool. If you have a lot of money in large caps in a particular sector, it might be good to consider a mid cap stock and pick a different sector than the one that you're heavily invested in, and do the research if necessary, or choose a solid mutual fund or ETF. But mid caps can provide a very good diversification.
Mid caps provide a good growth potential. Like you said, a lot of these companies, they're in between. They've gotten past the upstart, like the smaller companies, and they're still in the process of growing, where some of the large caps have already capped out. So they're great growth potential. Think about it, you all. Once again, it's another tool, like those say, in the toolbox to be able to use.
And finally, you think about the Goldilocks theory, and what that's talking about is what's in the middle is usually what works best. Not too big, not too small, not too hot, not too cold, just right. Mid caps can provide that. So take a look. It might be for you.
So with that, I want to thank everybody for tuning in this week. And if you have any questions, this is the time to ask us because we always like to open it up. If there's anything, any questions you have, things you heard out there, any new investments, like we said, we got Rodney Madison Sr., the noteexperience.com, and that's always an interesting opportunity for another investment because it's all about diversification as we talked about. So just like to give a roll call. We got a lot of people on today. And please put some comments in the comment box if you have any questions about investing or mid caps. We love it. So I want to start off with my three sisters who are on today, though. Linda, Gloria, and Nolia. They are the most wonderful, wonderful sisters a little brother can ever have. They always have looked out for me. And our frat brother, Charles Clutch McCargo. How you doing, my brother? Garnett Nickens, how you doing? So glad you out there. Joanne Skinner, how are you, dearest? And these are all FDIC people, by the way, though, that I mentioned. And even Modestine Johnson. And I think all three of y'all are retired, if I'm correct. Put me in there if I'm wrong, but all three have retired from the great FDIC. And hey, is that now? That's a different. She must be coming. Oh, she's coming in from YouTube. I was like, that's a different caller. What's up now? So glad to see you. No, Leon. Mo better. You getting better. You coming on earlier. So glad to see you on time. My little brother, Colton Chapman. What's up, Chap? Good to see you, man. And glad to see everybody out here. Who am I missing? Did I miss anybody? No, I covered everybody. Dope. Covered everybody today. And I don't know, I might be redundant though, but tell me if I gave this one before. Quote of the week. Don't wait for things to get easier, simpler, better. Life will always be complicated. Learn to be happy right now. Otherwise, you run out of time.
Yeah, that's a new one.
Always like when I meet your approval, Dope.
That was a good one.
Thank you, Dope. I try hard, man, big brother. You have high standards, I sure. Thanks, everybody, for tuning in. Is this mic on? Is this thing on? All right, y'all. We look forward to seeing you next week. Same place, same channel. Please, you all. We're up to approximately 500 people following us, Dope. I think it's 494 to be exact. We thank all of you all that are on with us. We really appreciate it. And send us some topics, y'all. We rolling. We just sending out here what we think. And we hope we are reaching you all where you at. And let us know if you want us to. Are we too shallow? Are we too deep? And we always take comments because we want to provide the best information. We got a whole range. We got from younger people, from high school. We got college people. Now the majority are over 55. But that's just because that's who we are. But we got a broad range, and we got people all over the world. So make sure y'all share on Facebook and go and ask people to subscribe on YouTube. We really appreciate it. See you all next week, and have a good rest of the week.